Trump-backed World Liberty Financial wins U.S. bank charter. World Liberty Financial, the crypto finance venture connected to President Trump's family, has received approval for a federal bank charter from U.S. regulators, according to a Reuters report published August 15, 2026. The approval gives the company a direct, supervised route into the U.S. banking system rather than relying on partner banks to move dollars. A national charter is a meaningful upgrade in status. It lets a firm hold certain accounts, plug into payment infrastructure, and operate under a federal supervisor instead of stitching together state licenses and sponsor bank agreements. For a crypto company, that shortens the distance between on-chain balances and the regulated dollar rails most users actually spend through. A regulated banking seat, not just a license. The distinction matters. Most crypto firms that touch U.S. dollars do so through a chain of intermediaries. A licensed money transmitter here, a sponsor bank there, a stablecoin issuer somewhere else. Each hop adds cost, delay, and a counterparty that can freeze funds. A federal charter collapses several of those hops into one supervised entity. That structure is exactly what regulators have started to formalize this year. The Office of the Comptroller of the Currency has been backing digital asset bank charters as a distinct path, giving crypto-native companies a way to seek national approval instead of assembling a patchwork of state permits. World Liberty Financial's approval fits that pattern rather than breaking new legal ground on its own. For the broader market, the read is straightforward. Regulators are no longer treating a crypto company applying to become a bank as an automatic non-starter. The Fear and Greed Index sat at 36 in fear as of August 15, 2026, with Bitcoin at $62,938, down 0.9% on the day, and Ether at $1,180. So the news landed in a soft tape rather than a euphoric one. The political overhang has not cleared. The approval does not arrive on a clean slate. World Liberty Financial has been under sustained scrutiny over who it does business with. Reporting earlier this month detailed how the firm took roughly $100 million from a money laundering suspect, a story that raised questions about the company's compliance controls well before it held any banking charter. Those two facts now sit side by side. A firm with unresolved questions about its counterparties has been handed a supervised banking seat. Supporters will argue that federal supervision is precisely the mechanism that forces tighter controls. Critics will argue that a charter confers legitimacy the company has not yet earned. Both readings can be true at once, and the coming months of examinations will settle which one holds. There is also the obvious conflict of interest question. A banking approval for a company tied to the sitting president invites accusations that the regulatory decision was political rather than technical. That charge is easy to make and hard to disprove, and it will follow the charter regardless of how the underlying supervision plays out. Implications for crypto payments and cards. A charter changes what a crypto firm can build. Direct access to payment systems is the foundation for issuing accounts, settling transactions, and potentially backing card programs without leaning on a third-party bank. Most crypto cards today run on exactly that kind of sponsor bank arrangement, where the card brand handles the crypto side and a licensed bank handles the dollars. A firm holding its own charter could, in theory, control more of that stack. That is a future possibility, not a stated plan. World Liberty Financial has not said it intends to launch a card or consumer accounts, and a charter approval is the start of a supervised build-out, not the finish. The gap between approved to operate as a bank and running live banking products is measured in quarters, sometimes years, and it is filled with capital requirements, examinations, and operational scrutiny. For users, the practical takeaway is patience. A charter is a structural signal that regulated crypto banking is becoming a real category in the U.S., alongside the stablecoin rails and tokenization pilots that have dominated 2026 headlines. It is not, on day one, a new place to hold money or a new card to spend from, and